So, if you're a beginner investor, it can often feel like investing is just for those that really understand the market and know all the different charts and have a great understanding, but that's just not the case anymore, especially with modern investing. In this video, I'm going to introduce you to something called an ETF, and it's probably something you've seen but may not understand, so let me jump into what exactly that is. An ETF is a way of owning hundreds or even thousands of companies whilst not actually having to do that much research on it and leaving it down to the professionals. So this allows you to hold companies like Tesla, Microsoft, Apple, and whilst all not really having to know too much about what they do. It's a very simple way to get started in investing. ETF investing is definitely not a get-rich-quick scheme. As we've seen with the S&P 500, an annualised return is around 8 to 9%, which is really good return on your investment and much better than what any savings account will offer you. However, there is still risk there, unlike a savings account, so it is possible that your account could lose 10 or 20% in a single year. However, over the long term, the market tends to rise and has done for the last 40 or 50. Therefore, ETF investing can be a great way to start building your wealth from as little as $100 or even £1 in some cases with modern investing, and it's important to stay consistent and try to invest what you can when. So, why is a savings account no good, and why is it not as good as some people believe? Well, simply, when your savings account offers you 2, 3 or 4%, you're not thinking about the fact that inflation actually rises by 2 or 3%, and in some cases recently, especially with COVID, we've seen that as high as 6 or 7% in certain years, which therefore is eating away at any profits you're going to be making from that savings account. So for example, if your savings account has offered you 3% but inflation is currently at 2.5%, you've actually only earned 0.5% on your money. Meanwhile, your trading account that could have earned 8 or 9% has actually still made 5 or 6%. And that is why it is important to invest if you want to try and beat that evil artist of inflation. So the simple goal of investing is to stop losing money by saving and actually start to invest for your long term. So why do people fear investing? The ultimate reason, and the reason I first didn't start, was the fear of losing all your money. And that is a big fear for a lot of people, but I've recently found that that's not really the case, nor is it that likely, as based on recent history. However, history, as we know, doesn't always mean the future. But based on this, over the last 40 or 50 years, it's a pretty safe indicator. As always, it's important to mention, me personally, I'm not a financial advisor, so therefore please don't take anything I say in this video as a financial advice. Investing is very risky and capital is at risk, so make sure to do plenty of your own research and contact a financial advisor if you feel the need to before you start investing. Let's get back. So as a beginner investor, it feels like you could be stuck between a rock and a hard place. So you shouldn't invest. So what should you do? Should you go and buy single stocks? Well, that's also another massive issue, because buying single stocks can lead to massive losses, as there's a much higher risk for a much higher return. However, that high return only tends to happen on a few companies. So Nvidia, for example, is a recent stock that has done really well, or Palantir, also done very well. But for these 1 or 2 stocks that have done really well, there's hundreds that have lost lots of money. And that could have been the one you picked. And there's no real way of knowing this without being able to look back. So if you shouldn't save your money, but you also shouldn't try and invest in just 1 or 2 stocks, what should you do? Well, that's when I want to introduce you to an ETF. So an ETF is an exchange traded fund. So what does this actually mean? An ETF can be seen as a basket of investments. So an ETF such as the S&P 500, for example, holds the top 500 companies in America. So this holds companies like Apple, Microsoft, and Nvidia, for example, with different weightings based on the market cap of the company. So the superpower of an ETF is its diversification. For them lower returns, but you are significantly reducing your risk, as you're holding hundreds of companies. Therefore, for example, out of the S&P 500, if one of those 500 companies was to do really, really bad that year and lose 50-60% of its value, you might not even notice. You might only lose 0.5%, but the rest of the companies have done well, so therefore you could still be up, whilst that one person that's invested in that single stock has lost 50% of their portfolio. This is why ETFs are a really strong contender for beginner investors. So let's get into how would you actually go about getting your first ETF. First, it's really important to consider the account you're going to invest in. If you're from the UK, it's so important that you utilise the stocks and shares ISA that we have here in the UK. This allows you to invest up to $20,000 per year, and any returns you get from that are completely tax-free. So there's no capital gains or no. In the UK, there are lots of providers that offer this. So you have Trading 212, Free Trade, Vanguard, just to name a few. And the important thing here is to simply consider the fees that these companies are going to charge you for holding your ETF with them. Me personally, I use Trading 212 because it's currently 0 fee. Then finally, once you've made an account with one of these providers, you can simply go in there and purchase yourself a share or two in one of these big ETFs. So me personally, I hold the FTSE All World, and I hold the VWRP edition, as this is the accumulating version. There is also the VWRL edition, which is a distributing version. And to quickly summarise what that means, an accumulating version simply just reinvests the dividends from the fund directly back into the fund, whilst the distributing version actually sends these to yourself, and you then decide whether you want to reinvest or withdraw. And that's really as simple as it needs to be. So simply, cash loses money over time due to inflation. Therefore, this could force you to invest for long term. But investing in 1 or 2 stocks can be incredibly risky, and that fear of losing everything could be possible. Whereas an ETF there falls somewhere nicely in the middle. It offers 8 to 9% yields in most cases, but also has a lower risk than trying to pick singles. The simple steps are simply: first, open a stocks and shares ISA. Second, you select your provider, and then once you've selected your provider, you can now invest your first cash sum and buy an ETF. It's important to start early as you can, but starting small is not a problem as long as you try to grow over time. And that's it, simple as that. So if you enjoyed this video, I'll next do a video on how to select which ETF you want to use. There's some great tools out there, especially like Just ETF. So let me know in the comments what you thought of the video, and let me know what do you invest in. I'd be really interested to know. Thanks for watching, and make sure to subscribe for the next one.